Hello there, Maverick Traders. This is Imre, and welcome to today's class on trading the flat pattern. Let's get right into it. All right, so I was talking with a couple traders over email, and they were asking me, "Hey, Imre, have you thought about incorporating these W and M patterns, into your video classes?" And W and M patterns are, as their name implies, they look like W's or M's, and they're pretty common reversal patterns. They're also patterns that are known to trap traders, either on the bull side or on the bear side. And I was like, yeah, I actually do plan on talking about trading those patterns next. I just have a different term for them. Now, it doesn't matter to me whether you call something a W or an M, or whether you call it the way that I do, which is a flat pattern. So I call them flat patterns kind of as a catch-all term. And we're going to discuss, and I've covered the flat pattern in terms of the basics of what that pattern looks like. And today we're going to discuss how to trade it. So trading the flat pattern, when it comes to entry techniques, there are two main ones. And you have a choice to stick to only one entry method, or you can incorporate both into your overall toolbox. I like to balance a number of factors, including the probability that the pattern I'm tracking is actually complete, as well as the risk-reward profile of that potential trade before deciding which entry technique I want to use. Now, in terms of stop loss placements, it is very straightforward, as you have two main options. The first option is to place your stop just beyond the extreme of wave C of the flat. This method will maximize your risk reward profile. The second option is to place your stop just beyond the extreme of the impulse wave preceding the flat. And this will give you a little bit more wiggle room in the event that the flat is not yet complete after you've entered into the trade. So which path you're going to take is ultimately going to depend on your individual strengths and weaknesses as a trader, as well as your personal risk tolerance, of course. And when it comes to targets, like I mentioned in my last video, which is trading the zigzag, I don't like to set targets based on individual patterns. I have one method to set targets, which will be covered in a separate video once I've covered how to trade all the core patterns that I do like to trade. So moving on to entry technique number one, candlestick patterns. Candlesticks can be an incredibly effective way to enter into any trade, and the typical behavior that leads to a change of character as a corrective pattern comes to an end is a visible decrease of momentum. So I'm looking for small bodied candlesticks with wicks on either side, and that's followed by a strong candlestick in the direction of the larger underlying trend. Now, some examples of strong candlesticks include candles with a long lower wick, that would be in a bullish trend, or a long upper wick in a bearish trend, and this would be followed by a close near the highs or lows of that candle. Now, I also like to look for bullish candles to make a higher high and a higher close relative to the candle immediately preceding it, and we'll cover exactly what that means in just a moment. And a bearish trend would mean looking for a candle with a lower low and a lower close relative to the candle immediately preceding it. Okay, so here is a chart of PayPal holdings. Now, I know this is not a currency. The reason I'm showing you this chart is to make it very clear that these kinds of patterns occur in all markets. Technical analysis is technical analysis. It's not like there's a different kind of human being that trades PayPal versus a kind of human being that trades crypto or the euro, for instance. Okay, so anyway, what I'm looking at here on the specific chart is that we see what I call an indecision candle. You can also call it a doji if you like, on a gap down, and that was followed by a large bullish candle closing on its highs. We can see that indecision candle right here, followed by this extremely bullish candle right there, and then prices just took off afterwards. All right, so that's exactly the kind of change in character I would look for as the flat pattern is coming to an end. Also, this is the flat pattern itself. So if I had to call this an M pattern, I absolutely could. It looks like the letter M, if you will. So what's really fascinating about flat patterns is that it traps traders both on the long and the short side. So as traders see this breakout, they're going to go long the market, and then as the market breaks down, they get stopped out. And then as we break this support level, traders will go short the market, and then as the market rallies back in the direction of larger underlying trend, they're going to get stopped out once more. All right, that's why I love this pattern so much. It offers potential opportunities to trade the market both ways. Okay, now here's an example of a flat pattern in a cryptocurrency called Avalanche. So again, here, this time we have a W or sorry, this is, I swear I know my letters in the alphabet. This one's an M. The previous one, if we go back here for a second, guess you could call this one more of a W. In any case, the operative principle remains the same. We're looking for traders to get trapped short as we break below support. And then sometimes, but not always, you'll notice we didn't break out of resistance here. So maybe too many traders can get trapped on the long side, although I'm sure some did. But we traded back to prior resistance, and then we fall down. So notice the visible slowdown in momentum here. We get indecision candles, candles that don't close near their lows or highs, really. I mean, I guess that one bullish candle did close near its highs, but we see these lower wicks. Momentum is slowing down. We have these big bodied candlesticks here with lower wicks closing near their highs. This one's a very strong bullish candlestick as well. And then we get this change in character as we trade sideways for a little bit. We get an exhaustive pop-up, which couldn't even break the resistance up above. And then we get this large bearish engulfing bar followed by a steep drop lower. Pretty cool, right? Like I love trading flats. For this reason, they usually portend large moves back in the direction of the main underlying trend. Here's a flat, large flat. This is a weekly time frame chart on the Dow Jones Industrial Average. All right, so same thing. We get an exhaustion gap lower followed by a very large bullish engulfing bar. Now, currency traders, we don't really have to deal too often with gaps in the market. It's more of a feature that's unique to markets that are, that have a large equity markets close at 4 p.m. and then we have overnight trading, and then they open up again at 9:30 in the morning, right? So there is potential for a gap in price. Currency markets being 24 hours, we don't typically have to deal with gaps except for weekends in fiat currency. So anyway, we get that large gap lower, and then we get this enormous bullish engulfing candle right here, and then the market just rips higher. Okay, so candlesticks can be a very effective way to trade the flat. The second entry technique, and this is personally my favorite and the one I will admit to using the most often, is to wait for a break of the wave 4 of C extreme. Very similar to my one of my favorite entry techniques on the zigzag pattern. So this entry technique is my favorite because it balances a high probability of successfully timing the market with a typically excellent risk-reward profile. Now, this technique does only work if you can count a clean 5 waves for wave C of the flat. If you have any doubts about that count for wave C, do not utilize this technique. Now, sometimes it is necessary to drop time frames in order to see the subwaves of wave C a little bit more clearly. Okay, all right, so bear with me, guys. Here we have a clear 5-wave advance, right, for wave C of this flat. 1, 2, 3, 4, 5, and that gives me a very specific price level. In this case, in the Euro Swiss franc currency pair, that price level is 113.66. I know that if we break 113.66, I have a trade. This allows me to set a pending order. In this case, it would be a sell stop, and walk away from my system. For those of you with a sharp eye, you'll notice that we broke that level, and then we put in another flat correction before breaking much lower. And then moving on here, we have Solana, again, a cryptocurrency. And here we have the flat A, B, and then for wave C, we have 1, 2, 3, 4, 5. So again, I get a very specific price level. In this case, it's 117.5. So at a break of that level, I know I've got a trade. And here we have a stock. This one's AMC. And again, we can see the very clear 5-wave subdivision for wave C. And again, because it's a price level I'm dealing with, I have a very specific parameter with which to play with in terms of setting an entry order. So in this case, it would be 27.78. We break that level to the upside, it's go time. And the final example here is going to be in the euro, where again, we have a very clear, I can understand why this one might not be as clear. It looks a little bit messy, but I'll walk you through it. So where it gets messy is with wave 3 potentially. So this is how we count wave 3. 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3. This is wave 4. And then remember, wave 5 will have its own 5-wave structure. So that's 1, 2, 3, 4, and 5. So once again, I have a very specific price level in the euro, 117.94. We break below 117.94, I know I have a trade to the downside. All right, so that covers it for the flat. It's a very simple pattern to trade. I think the difficulty with trading a flat is not necessarily figuring out how you're going to trade it, but correctly identifying the flat sequence in real time. Zigzags are very easy to identify. You know, they're sharp, typical pullbacks. Flats are different from bases, right? So at Maverick, you know, when we're trading a base, we're looking for things to stay high and tight if we're trading a high base. A flat, however, usually looks more like this, right? A lot of people would call that a range-bound market, all right? So there's going to be a wider trading range. Now, again, sometimes if the range is so wide, there will be opportunities to trade both sides. If you're a trend trader, however, then you will follow the entry and trading parameters that I've outlined in today's video. So I hope this video is helpful, and as always, if you have any questions, please don't hesitate, reach out to me anytime. Thank you, traders. See you in my next video.